let me now welcome on board Sushil Kumar Modi, Director of Finance at the Lodha Group, to talk about how their quarterly performance has been. Sushil, hi, morning. Great to have you on ET now. You've reported a very strong pre-sales and collections in FY26, but you've managed to miss the pre-sale guidance by 471 odd crore rupees. Tell us what really transpired.
Hi, morning, Aisha. No, while the quarterly performance we'll talk in somewhat plus and minuses, but I think it is important to take a pause at this point, having completed 5 years or fifth anniversary of our listing, having listed in April 21. In 5 years, what we have delivered perhaps is extraordinary. You see, whichever parameters, be it pre-sales, has grown from 6,000 to 20,000 crore plus, delivering 28% CAGR growth over 5 years. The PAT has grown from a kind of 6x from 550 odd crore to like 3,500 odd crore. And these all we have achieved while delivering even more robust and resilient balance sheet, where the net debt to equity has come down to more like 0.23 as against whatever 3.5 it was 5 years back. So net, all in all, I think a wholesome performance, delivered by Lodha consistently quarter on quarter and year on year. And this is where if we need to take it forward from here and see the numbers that kind of has been delivered in the quarter, while we delivered 5,800 odd crore for the quarter, delivering around 23% YOY growth on pre-sales. For the year as a whole, 20,500 crore, delivering 16%. Now this 16% and thereby small bit of, a small bit of numbers not kind of reaching the guidance can be seen in the context of what transpired in the month of March geopolitically. As we know, the still on, and some of these things has impacted numerous segment and numerous facet of all over globally. So somewhat of some of the sales that we contemplated would perhaps consummate within time in the month of March itself, perhaps ended up in being a little bit prolonged, and thereby the number has just slightly fallen short. But that does not change the trajectory, right? We continue to remain confident even going forward to kind of continue the trajectory that we have delivered in the past. Having delivered this year, overall, our profit after tax having grown by around 25% to 3,500 odd crore, that kind of speaks in itself, alongside the top line growth and the fact that we are yet kind of just scratching the surface. Our market share, even today, in spite of having grown what we have grown, is more like potentially 3 to 4% on the segment that we look for in top 6 cities in terms of the primary sales. So thereby meaning huge runway for a brand like Lodha to continue growing in the right segment that we play around.
Sushil, how can you give us a sense of the kind of conversions of these pre-sales into FY27? How much of delivery will happen in FY27 and the projected conversion of the pre-sales which you have been doing healthy over the last few years?
So when you say conversion, not sure what you meant exactly, but nonetheless, from a sales versus delivery standpoint, we like to kind of go head on head, right? So we sold around 6,500 odd units, and so is the delivery. Also, we would have done perhaps even higher than that. So yeah, so thereby meaning in our business, and which is where the Lodha brand stands out. For us, the critical piece is to ensure the timely and a quality delivery with the superior experience to the consumer. And all of these kind of cumulatively means that our construction has to continue on a scale. As we keep growing our sales, so is the delivery. And that's kind of the nature of the business, and which is where the Lodha stands out.
And just the fact that, Mr. Modi, hi, this is Harsh here. Just the fact that pre-sales for FY26 have fallen a bit short, and I'm not harping on that. I'm trying to get a sense whether FY27 guidance, therefore, gets bumped up as a result of that at all. Does that 4,500 crore delta get added up to the FY27 numbers?
See, our next year guidance is 24,000 crore to deliver, which on the last year performance would be around 17% of growth. Needless to say, it is given after taking into account all the geopolitical or the global nuances, starting from the Trump tariff to the ongoing war, where we don't have a solution as yet. Obviously, we all are hoping that it should not be a prolonged nuance, because prolonged nuance obviously can impact a lot many things. But keeping in mind that these should be more transitionary in nature, and therefore we remain confident of delivering 24,000 crore in FY27. But more important than that is to our aim and the goalpost for the business to continue delivering 20% PAT growth year on year, not just for the next year, but for the foreseeable future. So that's the kind of the aim that we have set in. That's one. And another big reset in the business that we are doing on a strategy front is to bring in the resilience from the annuity business, which was somewhat missing in our overall scheme of things. We are now targeting to effectively grow 10 times our annuity income in next 6 years' times. We delivered around 300 odd crore of rental income in last year FY26, but would like to grow it to more like 3,000 crore in next 6 years. So
Right.
that brings the one facet which was somewhat missing in our business, and more focused on the housing development business.
Understood. Sushil, so great chatting with you today. Thank you so much for your time.
Thank you.
Okay, let's take a very quick break. When we come back, we'll chat with the Shriram Finance Management on their quarterly performance.